Tyler, we did a video a few weeks back taking a look at a couple players in the nuclear space. And it seems like since then, the news has been massive and generally positive for nuclear. Is it coming roaring back?
In the past, I don't know how long we've been doing this. I don't think I've seen so much positive news about nuclear power in like years. This is different. I will admit that.
Yeah, and it does feel like the general consensus around nuclear has certainly shifted over the past decade. And because nuclear is so expensive and takes so long to develop, maybe we're starting to see the signs of that. I'm Jason Hall. This is Investing Unscripted. Tyler and I are going to talk about a stock that we think could be worth buying, could be ready to go on a big run based on everything that's happening with nuclear right now. Before we get into the details, though, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas than just the one we're going to talk about here today, you should go check out our special link. It's fool.com/unscripted. Go to that link and you can get access to the Motley Fool's 10 best stocks to buy right now. Okay, Tyler. So they're going to set the stage first. I'm going to share on the screen. This was some of the biggest news. Matt DeLallo, colleague and friend of ours over at the Motley Fool, covered it. A giant power purchase agreement that Microsoft signed with Constellation Energy. They're going to be restarting one of the reactors that was shuttered at 3 Mile Island after that facility was closed. Of course, they're renaming it. I think that's probably a smart move as part of this to disassociate it with the largest nuclear disaster in the US, which actually was minimal in terms of its impact, but certainly played a role over the past 4 decades of putting a little bit of a stink on nuclear that seems like it's starting to come off. So the point is you have a massive corporate client with a lot of their artificial intelligence spending, data center costs. They want access to carbon-free energy, and they're willing to pay for it for nuclear. So this is kind of the biggest one that seems like it's driving a lot of the news cycle right now.
Yeah, not to get too much into the nitty gritty here. I think from a media standpoint, there was a lot of like headlines that basically said Microsoft and Constellation Energy restarting 3 Mile Island to power AI. That was just like a whoa, we didn't see that one coming on your
Yeah.
bingo card in terms of what's going to happen. But there has been a lot of chatter around the idea of using nuclear power as a kind of a way to meet the voracious demand that AI and the data centers needed to make AI possible. How to satisfy that, because there's consternations that renewable power isn't going to be able to do it. And if we don't use renewable power, all of a sudden we're looking at carbon-based power, which has it for a lot of people that we have the ecological aspects of that to consider. So nuclear is kind of what people are starting to circle a lot more. We talked about new scale energy with small, medium reactors, or small modular, excuse me, reactors as a potential option, but that's still a very like speculative idea. And so I wanted to circle around basically to like the one company who's profitable, who's currently operating in the nuclear space right now, and that's Cameco. They are one of the world's largest producers of uranium fuel. And in a recent deal, I can't remember precisely when it happened, but basically they did a deal where they did a joint venture with one of the Brookfield entities to acquire Westinghouse's nuclear power construction business. Westinghouse having one of the very few existing designs that's actually approved by the Department of Energy. And so it puts them in pole position for either to service existing Westinghouse facilities, or should we actually see new construction of nuclear facilities in the United States on a large scale, Westinghouse would be in a pole position to do so.
Yeah, that's exactly right. And it's interesting. So Cameco, again, I think one of the things that makes Cameco unique, and I've got a little bit of info here from one of their presentations. Not only are they at number one, a pure play to be able to invest in uranium for nuclear, but they're one of the low cost providers in the world. They're one of the largest investable businesses. There's other larger sources of uranium, but things
Jason,
that
what do you mean we can't invest in Kazatomprom? What are you talking about?
it's a little more difficult to invest in Kazakhstan, but the point is simple. This is an investable business. It's a Canadian company, the largest, as you see here, the largest the highest grade uranium mine in the world, and also the world's largest McArthur River and Key Lake, the largest combination mine and mill. So there's a substantial amount of production that's in places that are viewed as politically stable. I think there's a lot of important value there as well. And it seems like the cost structure for the cost and the cost cycle for any materials is at risk creates risk for investors. It also can create opportunity. And it seems like Cameco's in a good position there as demand for nuclear is beginning to ramp up. Their ability to supply the market and have relatively low costs and maximize pricing is good. You mentioned Westinghouse. That's important as part of their future as well. Tyler, this is what I want you to talk about a little bit here, because we've talked about lithium producers. We've talked about steel companies that are also in the business of producing iron feedstock. Oil and gas companies we talk about. These companies live and die based on commodity prices and supply and demand. So thinking about Cameco, what are the risks when it comes to that and the opportunities, and how should investors think about approaching Cameco?
I mean, it's uranium. It's cyclical, just like anything else. The one thing that is kind of unique about uranium relative to like other commodities is the cycle moves much slower. This can be like a multi-decade sort of thing, because typically what happens is that once a nuclear plant is up and running, it has pretty consistent consumption for a long time. So basically, the ups and downs of the swings of the market tend to be with the shuttering or reopening of a facility. Over the past 10 years, we've been in a little bit of a shuttering mood, I guess, if you will, globally, especially in Europe, where there was considerable, well, Europe and Japan for a degree. Japan because of the Fukushima disaster in early 2010s, but Japan has actually turned it back around. They're starting to restart several nuclear facilities. The United States is starting to look at recommissioning older facilities at, like we said, the 3 Mile Island. I think they're also looking at recommissioning in California as well. And then there's been some build out in Asia, specifically in China, but it wasn't relatively strong enough, I guess, if you want to say a word, to offset the declines that were happening elsewhere. But it appears that we're on the upswing in terms of total demand. And you can see it in Cameco's results over the past 10 years from 2014, 2013, all the way down to 2020, 2021 was basically a downhill slide in terms of revenue, earnings, everything like that. And to the point where it got quite unprofitable for a while. For Cameco, which is surprising because they tend to be one of the companies that sells things on long-term contracts versus trying to sell at the spot market, which works really well for a while. But with this upswing, and you get this little bit more of an embedded revenue stream with maintenance related to Westinghouse, and then a little bit of upside related to potential new construction with Westinghouse. It would appear, I'm not, this isn't gospel here, but it would appear that we're on the upcycle of the commodity curve, at least in uranium. I don't know how long that will last. Like I said, they tend to last longer, but all it takes is one nuclear disaster worldwide for things to change very fast when it comes to the cycle here. So all in all, it's the stock doesn't look cheap on like traditional valuation metrics, but that's because it's coming off such a low earnings base lately. And so with all of that in mind, I think if somebody is looking to invest in nuclear power as like the solution that's going to help us fuel AI, growing electricity demand globally, Cameco is probably your best bet versus some of these more speculative ideas. They have the assets, they have the cash flow, they have the ability to fund things, unlike others who are going to kind of live in speculative world for a long time.